Hi, this is Michael Fisher for SavingAndInvesting.com, and I want to talk briefly about what an ISA is in the UK. An ISA is an individual savings account that allows taxpayers in the UK to set aside a certain amount of money and compound or regain a return on that money on a tax-free basis. ISA stands for Individual Savings Accounts. In the year 2009, a UK taxpayer could put aside £7,200 and have that gain a return subject to the stock market and subject to what it's invested in over the coming years, and then be taken out at any given point in time with no limits as to how long the amount has to be held inside the ISA or when it can be taken out. And when it's taken out, no tax is paid on the amount that was in the ISA plan. So effectively, we could set up an ISA on money that we've already paid tax on that's ended up in our bank account, invested, for example, even leave it in cash or invest in very safe short-term money market instruments in the UK, and basically gain a return on that money, take it out at any point in time, and not pay tax on the amount of gain that's taken place. Now clearly, if we invest in an ISA that invests in the stock market, and in that particular time period the stock market is down, we can clearly also have losses. But if we are considering making investments in mutual funds or index funds in the UK, then doing that through an ISA or holding money in our bank accounts, then doing that through an ISA offers the advantage that any return that we would get would be completely tax-free. And not only that, with the ISA structure, there is no limit as to how long the money has to be held in the account, nor does it have to be withdrawn at any point in time or after a certain age. So the individual savings account in the UK is a way of incentivizing, for the government to incentivize savers and investors to set aside some money and to create pools of capital that are then ultimately pools of capital that become providers of capital to companies and governments effectively around the world through mutual funds or what are known as unit trusts in the UK, and for that money to gain a return on a tax-free basis. So we can see how ISAs offer tremendous advantages over holding those investments directly without the ISA tax wrapper, because the ISA tax wrapper effectively shields all of the returns from